Back in 2015, if someone offered you a chance to invest in SpaceX, you could have said, of course. Today, companies like SpaceX, OpenAI, Anthropic, Stripe, and XAI are valued at hundreds of billions of dollars. But here's the problem. Everyone wants a piece of them. You are not allowed in, not because you lack convictions, but because private markets have always been reserved only for venture capital firms, institutions, and the ultra wealthy. So, what if anyone could invest in this company with just $20? Seriously, this is one of the biggest flaws in today's financial system. By the time companies finally go public, most of the explosive growth has already happened. Years ago, investors could buy Amazon, Google, or Facebook much earlier in their journey. Today, the biggest companies stay private much longer. That means most of the value creation happens before the IPO, and retail investors only get access when the valuation is already enormous. Unless you are a VC or have hundreds of thousands of dollars, you simply don't get invited. That's exactly the problem Wlth wants to solve. Instead of building another crypto exchange or another DeFi protocol, Wlth is trying to build something much bigger. Think of it as a bridge between private markets and everyday investors. Here's how it works. Wlth acquires access to private investment opportunity instead of requiring one investor to buy the entire allocation. That ownership is divided into smaller digital units called slices. Imagine owning a tiny fraction of a private investment instead of needing 6 figures upfront. This dramatically lowers the barrier to entry. Instead of investing hundreds of thousands of dollars, you may be able to start with as little as $20. From the user perspective, it feels much closer to investing through a modern fintech app than interacting with a traditional crypto protocol. At this point, you might ask, why use blockchain at all? The answer isn't because blockchain is trendy. It's because tokenization makes fractional ownership far more efficient. Instead of relying on paperwork and slow settlement processes, ownership can be represented digitally. That opens the door to futures that traditional private equity has struggled with for decades. For example, one of the biggest problems with private investing is liquidity. Normally, if you invest in a startup, your money could be locked up for years. Wlth's long-term vision is to build a marketplace where eligible tokenized position can be traded before an IPO, making these investments more flexible than traditional private market structures. But I don't think Wlth is just building another crypto project. I think they are trying to build the Robin Hood of tokenized private market. Their roadmap extends beyond pre-IPO investing. They want to introduce curated investment funds, AI-assisted portfolio strategies, community-driven investment decisions, and eventually a complete marketplace for tokenized real-world assets. If they succeed, blockchain becomes almost invisible. Users won't care what chain the platform runs on. They care that they can finally access investment that were once reserved for the wealthy. Of course, there's a still important question. How is the underlying ownership structure? How is compliance handled across different countries? How liquid can this market actually become? And can tokenized private investing scale globally without running into regulatory barriers? Those questions will ultimately determine whether Wlth becomes a niche crypto platform or one of the companies helping reshape how people invest over the next decade. Because in the end, the biggest innovations may not be blockchain itself. It may simply be giving millions of ordinary investors access to opportunities they were never able to reach before. What do you think about this? Let me know in the comments. And if you find this video helpful, don't forget to like and subscribe for more deep dives.